Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates. Anticipations are market participants' expectations, and market participants express their anticipations and expectations by taking a bet on a particular direction. That's exactly what causes markets to move ahead of key events, and the CSI 300, which is China's benchmark index, jumped after reports that Chinese Premier Xi Jinping has started taking special interest into the recent move in equity markets. Let's find out what else are markets anticipating. Good morning, JK. With the current set of dollar strength moves, what do you think markets are positioning for?
Good morning, Swaraj. Yes, first on the Chinese market, yes, the official concerns have been rising about the slumping Chinese market that trade close to five-year lows, even as the major world markets have hit, historical highs. And recently, Chinese central bank cut the bank's reserve rate by 1%, after which stocks had bounced. But last week, all of those gains were eroded, taking stocks back to the lows. And by Monday, the stock market value had fallen by about 6.1 trillion compared to the peaks of February 2021. And they have been hit by a slumping economy and speculative selling as well. So the alarm bells rang among the government and other authorities. They have now been asking many of the state fund institutions to invest into stocks and also encouraging companies to do buybacks. So there's been many desperate measures in the meantime. Premier is also going to meet the regulators to get an update, and a lot of seriousness into what's happening there. But while these are good to see, such gains for the markets, what we saw yesterday, cannot be sustained unless there are structural steps that authorities take to address the basic issues haunting the economy. Coming to the dollar, yes, we had seen a strong bounce in the dollar, more than 1% since the non-farm payrolls. Also, because of the big rise in the yields, yesterday was a day of consolidation. Yields also came down in the US after rising steeply from the lows of Friday. There were not much data yesterday as such, but the on the European side, we saw some data that was encouraging. German industrial orders went up by over 8%, and that was a big surprise. Although it was led by single large items, but it was still some sort of a comfort for the Eurozone, which has been struggling due to the slump in the German economy. We'll wait and see whether these green shoots really turn out to be something more. But on the day, of course, yields in Germany actually shot up. In fact, across Eurozone, yields shot up by 7 to 10 basis points, even as the US yields were correcting down. This was the reason why the dollar index also corrected down yesterday. And on the UK side also, the yields have risen by more than 25 basis points in yesterday's trading, although retreated a bit now. But generally, there is a very strong vibe that is permeating the UK economy. The activity level, particularly on the services side, has been improving a lot. And the composite PMI, which combines the two surveys of manufacturing and services, has risen to 8-month high this month, in January rather, at 52.9. So there is a lot of confidence that is being built into the UK economy as well. So what the dollar is looking for to resume its structural downtrend is to see some good news from other economies, because so far what we have seen is the better performance of US economy and the slumping picture in the other economies. Now whether US will slow down or not, or whether it will have a soft landing or no landing, is something which is still being assessed. But if the other economies show some resilience and improvement, that's probably going to be a trigger for dollar to resume its downtrend, because my structural view on the dollar is down. But that may be postponed if US continues to outperform others, and the relatively other economies are not so well performing. On the other markets, in stock market, initially there were some hesitant moves in the market, wobbled a bit, particularly looking at the banking sector. Again, some concerns. Even Yellen pointed out to some institutions facing issues due to the credit to real estate, the commercial real estate, in fact. But she also said the government is in control of things. So eventually, markets managed to eke out some gains in all the three indices. The global index also went up by 0.5%. Then the measures taken in China to shore up the market also had its positive impact on the European markets. The German market also rose about 0.7%. So there was some continuation of the positive vibes in the stock market. Although because we are trading at the peaks, we are seeing a lot of ups and downs in the market and not really seeing. It's difficult to see a very big breakout from these levels, and it would be prudent for investors to wait for a good dip to resume their long positions. As far as the dollar is concerned, yes, as I said, we have seen a consolidation. Euro has bounced slightly, having seen a double bottom at 1.072025 levels. And the UK pound has bounced very strongly from low 1.25. It has gone above 1.26 again. The lower yields have also driven the dollar again lower. On the rupee side, again 3 paisa range. But the underlying sentiment definitely continues to be strong because of the strong macros. We have seen more than 1.3 billion of inflows this month, erasing all the negative flow that we had seen last month. And once again, the flows for bond market has been more than 1 billion in the last 5 days of this month, and that's very impressive, particularly after the budget that we have seen, where fiscal deficit was lower and and borrowing from government is also going to be lower. So yields are attractive for the bond investors. So I think we expect to continue a steady stream of flows into the Indian markets. We also have a monetary policy. RBI tomorrow will deal with it tomorrow in detail, but in general, people don't expect any change in the policy, and we will all look to see what other measures that RBI will announce in complementing the efforts of the government to spur further growth or cementing the India's growth. So that's what we are looking at. Meantime, we also observed that the implied volatilities on Indian rupee has fallen to once again its lows that was seen in 2007. 1 year implied volatility. It's actually a reflection of stable rupee in the view of the market in the coming months at least. So that's something that won't be encouraging for anyone looking for a strong direction in the rupee. But we will see how RBI will react when we get chunky flows in the months ahead. Thank you.
Thank you, JK. And just quickly summarizing, the slump in Chinese markets has been garnering attention. And despite cut in reserve requirements and other stimulus measures, equities in China continue to remain weak. On the other hand, we had very little data yesterday, but on the European front, the German industrial orders went up for the previous month, which was a big surprise, but it was due to a single item. So whether this is a sustained recovery or not is a thing to observe. Now, just for our listeners, Germany is a key driver for the Eurozone economy, so its recovery is quite critical. And for India, rupee remained in a very narrow 3 paise range, but the underlying sentiment remains of a rupee appreciation due to the strong fundamentals. And of course, we have the RBI monetary policy tomorrow. It's expected that they will not be changing. They'll be maintaining the rates where it is, and we'll bring you the latest updates tomorrow. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.